interactive as ever because we are able to do it. And now we're going to take a look at SENS. No more cafefe for me, guys. Oosh, I think I drank too much cafefe. And here we go. This is a very interesting article that I was reviewing. I shared this one in our Discord. And let's go ahead and get started, guys. I'm going to add a stream marker. SENSEONICS, SENS. But David, what is happening in the technicals? This is the David show. It's not the Green Tom show. This is my favorite show because it is my show. Don't forget to like, share, and subscribe. Ring the bell, you motherfucker. SENSEONICS, first part of 2021 is crucial. Okay, guys?
Hell yeah!
Summary of the article. The company just announced its fourth quarter numbers. Forward-looking 2021 guidance is encouraging. The balance sheet has been strengthened considerably in recent times from multiple financings. Shares are oversold and should bottom quickly. The first few quarters of 2021 are vital to keep the momentum going. Looking for a portfolio of ideas like this one? Well, you gotta subscribe to this motherfucking channel, guys. In discussion with a colleague, and this colleague from this author, wherever he is, in discussion with a colleague recently on trading and investing, we were comparing low price stocks, which trade with high implied volatility, with low price value plays. What we mean by value play is companies which have sound financials and a very attractive valuation, but for some reason are out of favor with the market. The discussion revolved around which type of company is better for trading purposes. On one hand, maybe you have a $3 company trading with very high levels of implied volatility. This company, though, may have no income or very little to speak of, which obviously increases risk for the investor or trader. Furthermore, when a company is not generating either positive earnings or positive cash flow, it puts a time element on proceedings. These speculative type companies many times trade with very high levels of implied volatility because the fear associated with respect to future price movement is very high. You have seen this, guys. This fear, though, enables traders to reduce risk more than in the value play due to being able to collect far more option premium from associated options. One stock which we wrote about recently, or Seeking Alpha wrote about, is SENSEONICS, SENS. This stock came to our attention due to its spike in implied volatility, which took place in mid-January, which we caught. We were in the lower lows, right, Randy?
Oh, yeah!
Holy motherfungers. Yes, guys, at $3, okay? The company fits the bill perfectly with respect to being a firm which still sports high levels of high implied volatility, but does not have a proven cash-generating business which supports the company's ultra-high valuation. Let's go through the recent fourth quarter earnings report to see if the company has significant downside risk or not at this juncture. Remember, when selling option premium to reduce cost basis, our main focus is the downside as we are essentially capping our potential gains to the upside. So first off, SENS. Beat bottom line consensus by 0.01, EPF of negative 0.05 reported, and sales of $3.9 million also beats analyst expectations in its recent fourth quarter. CEO Team Goodnow really spoke up the SENS system and how significant value will be created going forward as a result of the firm's collaboration with Essentia. To recap, we liked prior to the company's fourth quarter numbers was the following. Through a series of stock sales, the company was able to raise over $170 million in total. Obviously, this quantity of capital buys the new partnership time, although Essentia will no doubt push the SENS offerings aggressively over the quarters to come. At the end of January, SENS cash equivalents, and restricted cash on the balance sheet top $187 million. Essentia has skin in the game, $35 million thus far. This means a lot as this company is proven in the commercial side of the diabetes space, so it wouldn't have put up this capital if it didn't see significant potential in SENSEONICS offerings. As noted in our previous article, an extra $15 million is expected to follow when if the 180-day product gets approved. This is a big deal as the longer duration sensors will generate the most demand going forward. The question is, how much has the market price in this approval into the shares at present? Being able to literally hand over your sales and marketing wing of the business was also going to produce synergies when the third party came on board. The CEO stated that well over $40 million per year is expected to be saved in sales and marketing expenses, which obviously should benefit the income statement going forward. The points we have mentioned above, though, are assumptions and nothing concrete that we can take to the bank. What we did see in the fourth quarter earnings report was news on the increase in the patient access support numbers due to increased coverage from more providers. SENS also gained ground with respect to being added to the Medicare beneficiary list. This opens up another avenue for new patients, of which Ascensia has already drawn up various programs to build on. If we look at the chart of SENS, which we're going to review pretty soon, we can see that shares rallied above $5 a share in February, which we caught, before finally bottoming below $2 a share on the 5th of March last. Shares now, though, seem to have found support and resistance, guys, and have formed a swing low. This is important as the January gap should provide support for the share price going forward. Suffice it to say, any significant drop below $1.50 a share will be a bearish in our view at this juncture. This new look SENSEONICS is expected to return between $12 and $15 million in global sales and between $60 to $65 million of operating cash flow. The positive cash flow number will go a long way in convincing the market that the firm has turned the corner, especially if sales come in above target. The potential here is evident. The market which SENSEONICS and ADC are selling into is a $5+ billion market which continues to grow at strong double-digit growth percentages every year. Although the company has a healthy install base in Europe, the market will be watching the US market closely to see if the firm can gain traction there quickly. Therefore, to sum up, although SENSEONICS seems to have everything in place to drive sales of its SENS system forward, share really have to take out their February highs convincingly before we can state that a bull market has begun in earnest. We look forward to continued coverage. I look forward to it as well. I don't even know how I'm going to call this article, but we're going to review SENS. My friends, I hope you remember when we reviewed it when it was at $1 to $2. And I know it's a little bit messy right now, but let me show you something really quick. So SENS, when we started talking about SENS, it was about $1.20, about this area. And when we closed above the 200 EMA, that's when things started to become a little bit stronger for me, in my perspective. I believe that this could be going to $5.50. We did go to 550s. We actually created a higher high at 556. But David, looks a little bit messy. Yes, let me remove my exponential moving averages real quick so you have a little bit of better perspective. We're just drawing support and resistance, and I'm going to go ahead and clean it a little bit more, okay? I don't want you to be confused with my charts, okay? Let me keep it a little bit clean, guys. But the structure that we're creating is the one that I was waiting for. We broke the trend line, the minor trend line over here, which is great. We needed to create a resistance level. We are starting to create it. We did go down just a little bit to create a last kiss over here. $3.17 pre-market right now, guys, is up 4.2%. If we go to lower than 150, I agree. We're going to go down. But if we break the resistance level over here with a bullish healthy candle, we're going to go back up to $5.58, which implies 63.56%, which I do think it will be reached once again. When we entered, it was a great opportunity. I'm going to be very honest. We saw the potential from SENSEONICS since we covered for the first time. The reasons why we entered was because when you look at the longer time frame, let's look at the monthly, guys. You can see that the price opened at 273. Okay, we opened at 273. We created a higher high at 424, and then we just retraced back down to 130s. We went up to 513, actually it's 530s, which was my first target for SENSEONICS after it dropped. I never entered here. I never entered here. I entered here. Why did I enter here? Because it broke the motherfucking trend line. That trend line alone indicates me that it just wants to go up. And if I get to remove all of this, let me remove this, guys. I don't want to confuse you. Let me keep it clean because I already got some targets in mind and I already got the targets. I've been showing the same targets for, I believe, weeks already, weeks and months. I don't even know how long we've been covering SENS already. Some people ask me, oh, David, how long does it take to move? It really depends on the company. It really depends on the structure and the business. So the good thing about SENSEONICS, just to as a quick glance, is that glance. As you can see, we retested the broken resistance with this new monthly candle. Even though it's still bearish, guys, it is bearish, but that is showing me that it is rejecting $1.90, and that actually happened the other day. It happened on March 5th. Okay, on March 5th, we went as low as we could go. And on the 4-hour, as you can see, once again, I'm going to add the trend line. It broke the trend line. So I was expecting the higher highs being created, which it did at $3.38. And then it went back down a little bit. In my opinion, if it gets to drop once again to about $2.30, 270s, 280s, that will be an awesome opportunity. Why? Because when we break the resistance over here of 340s, it could mean a 63% movement higher. Now let's compare once again with the previous candles. That means that we're gonna be revisiting the higher high we created. So we had a higher high. We already drew a Fibonacci level, guys. Let me show you. Once again, I've been doing this one like 10, 20 times already, guys. I've been doing SENSEONICS analysis like 20 times, but I just want you to have the perspective. As you can see, if I go ahead, and if I were to adjust this Fibonacci level, 540 was the target, right? That was my first target. Oops. As you can see, I got 668 as the next target. I got $8.39. Let me remove this $7, $8. Remove that. I see $10 becoming a target and even $13. And after that, I even see $18.36, $21.50s, and $25, which was one subscriber that came in and I was like, I see this going to 25. And the good thing about SENSEONICS today, even though it's still bearish on the monthly, is that we still got a few weeks ahead of us, and the stimulus is gonna be distributed to every American citizen, which, well, not everyone, but right, the ones that qualify. And $3.50 is the current price for the pre-market. But David, do you think it will go up? I still think that it can go up. Yes, I do think that SENSEONICS can go up. For me, like I said, an opportunity below at $2 could be a great opportunity to get in. Go back up to 530s. Should be an awesome opportunity. As you can see, it will be 76%. 668 will be around 117%. $8 will be about 176. 996, 226%. $13, 337, $18, 502, and motherfucking 21 will be 625, 717. Let me know in the chat room. Let me know in the comment section, guys. What do you think about SENSEONICS and this article? If there's any retracement, are you gonna capitalize on it? Let me know, guys. Do you think it's gonna be doing like a rocket? Or do you think it's gonna go down to the bottom of the ocean and visit SpongeBob Bubbles? Don't forget to like, share, and subscribe. Ring the motherfucking bell. And we are done with the motherfucking news. So now it is time to review the charts for your favorite request. Nano Dimension, AFRM, KHRNF, IFXY.